You want the headline? Okay, I'll tell you, just because I like you. Liquidity and cash. That's where you should be investing your money in 2019. Let's talk about the why. Slap hands, bump fists, let's go. Welcome back, everybody. Good to see your smiling faces. Now, if this is your first time on the channel, or perhaps you've been here before and you haven't subbed yet, consider subscribing by smashing this button right here, or the big red one just down below. If you want to see more videos from a fancy minimalist that escaped the 9-to-5 grind at 27 and became mortgage free at 30. The channel's here to talk about all the tips and tricks that I learned over the years on how to retire early and reach that financial freedom goal. Yeah. Okay, so let's do a quick recap before I go on into why I'm trying to save up $1 million in liquid funds / cash in the next 12 to 18 months, and how you can get the most out of the next economic nightmare, which is coming soon. Now, human beings tend to have fairly short memories. It happens because day-to-day life just becomes a whirlwind, and we tend to lean more towards positive things, and we try to ignore the negative. But quite often what feels good is not usually the wisest, especially when it comes to finances and the economy. So here's the truth, backed up by facts. The economy faces major recessions or corrections every 7 to 8 years since the 1920s. You can see here on this graph all the bars indicating the major declines in the market. Pause and count them up. Now here's the headline on the scary news. We've had a decade of complete upside and we are due for a crash. I typically like the term correction better. It just feels more positive. So you're probably wondering, why is stocking up on liquidity and cash so important right now? That's because in every recession in history, there is always a giant sale that goes on during the recession. The buying power of cash is magnified 3, 4, 5 times. And in certain markets like the last one, where construction took particularly a really hard hit, cash had 10 to 20 times the purchasing power. You know that old saying, buy low, sell high? I'm not just preaching this stuff. I'm actually doing this stuff as we speak. Here's paperwork showing where I just sold one of my cash flowing properties and took a HELOC out on my property that I built so I can have more liquidity when deals start popping up. I'm tightening up my purse strings right now and not taking on any more cash heavy projects or investments to try and hit my goal of having 1 million within the next 18 months. Now, between 2008 and 2011, when the economy was reeling back from one of the greatest corrections in decades, I saw guys in the construction industry who were really smart and conservative with their finances leading up to it. And what they were able to do was they found incredible deals and sales on construction equipment. I'm talking about skid steers, excavators, bulldozers, heavy earth moving equipment that cost hundreds of thousands, sometimes millions of dollars. Because they had cash and the market was so poor, they were able to buy virtually brand new equipment for 10 to 20 cents on the dollar. Businesses and people who hadn't managed their funds correctly or they over leveraged themselves, they were trying to offload their books so they can pay back their creditors or even liquidate their own businesses. So just to put that in perspective, they're buying a $500,000 piece of equipment for $100,000 to $200,000 in cash. Now imagine if you could do that same thing with homes. And that's where I came in and where I learned my biggest lesson during the last recession. And I hope you get the same lesson from me so you don't have to experience the loss personally. Now at one of my properties, I had 2 neighbors who were selling their homes for a combined asking price of $250,000 cash. Nobody was biting. It sat there for months, almost a year. One was for $90,000 and the other was for $150,000. At the time, I was just cash poor. I was over leveraged and I had all of my money tied up in properties and other assets. I simply couldn't buy it. Now, in 5 years, my 2 neighbors' homes, they just recently sold this past year. They sold it for a combined $520,000. Over $250,000 in profits, not including the potential cash flow that I could have pulled from it during those 5 years. It's a bitter lesson, but I will never forget it. And that's why I'm doing everything I possibly can to stockpile up on hordes of cash and safe liquid funds so when this next recession hits in the next couple years that I'm ready to find those deals. Now, this doesn't just apply to the construction or the real estate industries. It funnels down down to all channels. Now, if you're old enough to remember the 2007-2008 recession, everything went on clearance and everything could be purchased at a discount. We're talking about clothes, shoes, wine, cars, tools, vacations, you name it. Everything was on clearance and getting ready to sell from the overabundance of inventory from the good years. Now, here's how you can make money. Most folks out there, most people, they see recessions and declines and corrections as something that's negative and constrictive. That's the time where they want to hunker up and play it super safe. I'm here to tell you from personal experience that this is the best time for great opportunity and great monetary growth. The world is on clearance. If you don't believe me, take Warren Buffett's, take Gary Vee's word for it, take all of these billionaire investors who've done it very well, that this is their same mentality. So you 20-somethings who are all under 30 years old who don't remember the last recession, I'm telling you now, get ready, buckle up for this next one. It can either set your finances on a trajectory like it did for me and set you up for the rest of your life, or it could crush your credit and crush your financial dreams and have you trying to scrape and work yourself back out of the hole if you don't pay attention to it. So essentially what I'm saying is stop over leveraging yourself. Get yourself out of debt and save as much money as you possibly can. Get into super saver mode, minimalist mode, whatever you want to call it, and get ready. Now, I'm not saying stop all movement and all activity because Warren Buffett can't even predict the next recession. What we can only do is use one of our greatest and most valuable teachers, history, and take a look at the last 100 years of data and information and make educated decisions off of that. And right now, by far, we're in one of the longest positive streaks in the history of the market. Now, enough of my ranting. Let me get into a little bit more of the specifics of what I'm actually doing. I've worked very hard to reduce my living expenses. Right now, I'm just below $1,000 a month. I'm taking probably as high as 90 to 95% of all of my cash flow profits above that $1,000 and I'm throwing it straight into a money market account. I sold about 80% of my stock portfolio and I called my financial advisors and prepped them that I may be pulling out loans against my accounts in the near future. And perhaps the riskiest but greatest boon is establishing a $500,000 line of credit from my home, also known as a HELOC. Now, if you're finding this video helpful so far, feel free to hit that like button or even sub right here. Thanks. So you may be asking, what exactly is a HELOC and why in the world would you sign up for that right now? Here's the thing. HELOCs are perhaps one of the cheapest ways of getting money in the traditional sense. What it stands for is home equity line of credit. And right now, when the market is still really good and still near the peak, that means that home values are still very high. And since HELOCs are tied to the value of the home, that means I can maximize the amount that I can pull out. So for instance, let's use my home as an example. The home is valued at $820,000 right now in today's market. The bank approved roughly 60% at $500,000 for the HELOC. Now let's say the recession hits hard and the value of my home drops to $600,000. How much money can I still pull from my HELOC? I can still pull $500,000 out because I already have it and it's fixed teaser rate. Now with all that said, you do have to be super careful with these HELOCs because you're playing with your livelihood if you get into something that doesn't pan out. Only invest and use it on things that you're willing to bet your life on. Essentially, these are things that are in your lane or your wheelhouse. For me, it's properties and real estate in my area. Just don't be foolish and do the equivalent of putting it all on black and hoping for the best. Even right now, if I could go back and buy those construction equipment for 10 cents on a dollar, I wouldn't do it. It's not my expertise. I'm willing to leave money on the table if it's something that I don't know a lot about, just to protect my downside. Now, if you're taking anything from this video and you feel like you're not ready to invest yet, it's okay. But I beg you to start thinking about it and what you can do to prepare if you lose your job, if the house that you're renting gets sold, and how much money should you have in your savings to be able to survive 6 months, 12 months, 18 months. Get into super saving mode right now and start planning and thinking through what would you do with your family, what would you do for yourself, and how can you get through the next economic correction. Whether you want it, believe in it, or not, there's one looming over us and it's coming. Thanks so much for joining me today. I hope you found some value in it. Don't forget to like and subscribe if you haven't yet. I got more videos coming out, and tell me what you want to see. You want to hear more videos about stocks, real estate, minimalism, building? Tell me down below. But first, I want to hear your opinions. Do you think the next recession is coming soon? You definitely know my opinion. I love you all. Thanks so much for joining me today. Peace out.